Well, good morning, everybody. I'd like to thank you for taking the time out of your busy day to listen to what the exciting things are happening here at UEX. Today, we're going to talk a little bit about our team, where uranium markets are going, what that means for historical uranium investors and investment trends, and a little bit about what we're doing, of course, in the field, sort of enhancing our portfolio. So, with that in mind, we're gonna move along here. I will just a little housekeeping thing here. The format we're going to do is similar to the last couple of webinars we have done, where I'm going to do a little bit of a presentation first. Hopefully, it spurs some questions for you. You can see there's a Q&A tab there as part of this webinar. If you click on that, you can submit questions here, and I'll answer all the questions that I'm allowed to answer. Of course, can't answer things that would be against disclosure rules, but I'll do my very best to answer whatever you can, but I'll try to answer those at the end. It's really hard for me to do both here at the same time, so I appreciate your patience on that. So with this, we'll step forward here and talk about our exceptional uranium Athabasca portfolio and how we're helping lead discovery of cobalt in Canada. We will be talking about some forward-looking statements here, so please keep that in mind. Some of the things we're going to do, we're relying on these forward-looking statements. Our competitive advantage is four key things. One is our location, our experience, portfolio, and unique knowledge. Location being the Athabasca Basin. It's the prime place for particularly uranium juniors to be in the uranium space. It's one of the low-cost half and low-cost quartile historically, has exceptional grades and really prolifically amazing deposits. Our experience is pretty amazing as well. We have an extensive experience in this basin looking for and actually finding deposits. And we'll talk a little bit more about that. The portfolio, we range from grassroots projects right through to projects that are ready for development and everything in between. And we're probably the only company that actually has that possibility. And our unique knowledge, not only do we understand classic unconformity deposits, basement uranium deposits, but also our cobalt angle that nobody else knows about. A little bit about our team. We have combined over 40 years in capital market experience, oodles of years, lifetimes in accounting and auditing, tremendous amount of uranium exploration experience. Most people on our board have been CEOs or officers of public companies, but this board, and most members of this board here have guided this company to the acquisition of the almost 100 million pounds of uranium that we have today. I myself worked 12 years at Cameco, had a lot of years in the uranium space, led Cameco's global exploration teams for several years. Before that, I was a Saskatchewan exploration manager, was on the emerging acquisition team, and was involved in discoveries at Eagle Point. Evelyn Abbott, our CFO, has been around finance for 20 years and 13 years as CFO, so she knows all the challenges that come along with being in the uranium space. A very solid team. But what I'm probably equally as proud of is our team that I think most people don't realize. This team, while we're small and we're lean, with a mere 81 years of experience between the six of us, we're responsible for 420 million pounds worth of uranium discoveries in the basin. And obviously some of that before our time here at UEX. A lot of ex-Cameco people on our team. 8 discoveries, 10 plus showings. 2 of the deposit discoveries are actually in the mine plan or being mined. So we have an extensive amount of experience. We punch well above our weight. Before we jump in, I want to talk a little bit about uranium markets and where they're going in a little more unconventional matter. First things first, a little bit of math. You can see 177 minus 139 equals 37. And what does that mean? Over the last couple of years, demand for uranium has been about 177 million pounds. And primary supply and the secondary supply is accounted for about 139 million pounds of that. So in 2018 and 2019, there's been a deficit in the markets of 37 million pounds. And that's foreseeably going to continue into the next couple of years worth of production as we go forward. That's a pretty substantial deficit position that we're in now and have been for a couple of years. And there's been a perception that there's been a tremendous amount of uranium oversupply in the market, overhang out there. We're eating that up in a tremendous pace, and it's going to continue for the next several years. Probably the most interesting development over the last couple of weeks is in the US, where the administration has decided to put a budget item in for $150 million worth of of potential uranium purchases from domestic U.S. suppliers. And what that's going to do is finally resolve the challenge we've had over the last year and a half with the complete sort of suspended animation state of the uranium markets, where based on Section 232 and the subsequent Nuclear Fuels Working Group, the entire market, both inside the US and outside the US, have actually been idle waiting for a decision to happen, because if there had been quotas or tariffs put in the United States, it would have had a huge impact on the market, not just in the United States, but outside the United States. So what we think this does is actually take away the last sort of the political angles that will stop the uranium markets from functioning in a more traditional or more typically kind of the classic economic supply-demand fundamental model. So we're excited that we hope this is the first step to reestablishing real uranium markets that haven't existed since 2011. Some numbers in the top corner here. What do these numbers mean? And you can see they're all pretty close numbers. And these are from Cameco's 2019 year-end report. And $33.77 a pound is their U.S. realized price. It's higher in their Canadian price format, obviously. Cost of sales for them was very close, not much of a margin there. And you look at term price and spot price and see how close they are. Cameco is one of the lowest cost producers in the world, and pretty much right now, with the way prices are, it's really difficult for even the lowest cost producers like Kazatomprom and Cameco to actually realize a profit. And this has a huge impact on potential supply in the future. We don't know whether or not their pounds are going to be there to meet this forecast need of growth that's going on. What we do know is that Cameco's realized price over the last several years have been dropping, and that's because old legacy contracts signed back in the pre-2011 era are rolling off, and they're being replaced by term contracts or shorter term contracts that are closer to the price $32. And we're going to see over the next couple of years, if prices don't move, they're going to be very challenged to make things go. As you see, they've already curtailed a ton of production at Rabbit Lake and their U.S. operations, and at McArthur River particularly, to sort of help this. But this kind of sustainability, if this were one of the highest cost producers, you would go, okay, well, this is tough. But when it's hitting the lowest cost producers in the world, that's a serious supply concern. Meanwhile, we have 53 reactors under construction, while there are about 15 to 20 reactors that are looking to be retired over the next decade or so. That's still a tremendous amount of growth in the space. We haven't seen this kind of growth since the 1970s. And so demand profile is, even the most pessimistic scenarios are looking to grow substantially. And what we're also seeing is a change in the market behavior. So the top column, or the left column here, is our 2018 uranium purchases. On the right side is the 2019 purchase, and the top row is spot, the bottom row is term commitment or purchases over the last couple of years. And you can see that from 87 million pounds in 2018, there's been a serious reduction in spot purchases. And that's interesting because, quite frankly, we have Cameco out in the market trying to buy a lot of pounds, 11 to 15 million pounds, and yet the purchases are gone down. And we're seeing a change in the behavior. I think Cameco even mentioned this in their most recent year-end results. Suppliers, utilities are looking for term contracts. Now, it's challenging at today's price, and no one wants to sign term contracts that lose money, but they're starting to see that there's a supply shortfall coming, and security supply is number one concern for them. And that's, exacerbated by the cumulative uncovered requirements for reactors going forward. And you look out 10 years and go, okay, there's 800 million pounds of contracts that need to be signed in order to meet their basic commitments to keep their reactors running. And then in 2035, that goes up substantially by, basically by 5 years to still almost 1,500 million pounds. And you go, well, okay, that's 5.8 years and 10.8 years worth of supply at current production rates today. Things are pretty safe until you look at the fact that uranium mines take about 7 to 10 years to put into production. So right now, if it's not in the production pipeline being built, and there are none of those being built today, how are you going to supply this stuff? So what has been really interesting to me is the sort of disconnect in the market between your utilities, who think that the good times, the utilities are having a good time in terms of their revenue, but in terms of the uranium supply, that the low prices and cheap uranium is out there and it's going to last forever. And you got suppliers on the other hand who can't make a buck, and they can't even put any money into sustaining their operations because the margins are so tight. And supply shortfall. And the last time these conditions existed in the uranium markets was 2004, and that was just before the big boom happened. So we're pretty comfortable at UEX that, well, there might not be a boom in the next 2 days. We know that uranium prices are going to have to move here in the short term, and that, or in the moderate medium term. It's not a question of if, it's a question of when, because this environment is unsustainable. So if you're a uranium investor, you have your choices. You can look at grassroots projects where companies have a chunk of claims in any jurisdiction, just say the Athabasca, for example. And you can look at your development and production companies and say, okay, where do I want to leverage my investment? Or you can look at somewhere someone's got a portfolio and has those mid-term stage and resource opportunities in play. So when I look at UEX, we have a huge land portfolio, a ton of projects, 10 uranium deposits, almost 100 million pounds in resources, and of course that unique cobalt angle. And so what that does for our investors is it backstops any opportunity. We're going to move up and down with uranium price as others, but tied tightly to the fact that we have a substantial resource base. Your development companies, they'll move up and down with the uranium price. But as the risk drops off as they move closer to development, they're more leveraged to uranium price exclusively. Grassroots projects, that's your grand slam home run. Someone makes a discovery and things, they blow the roof off of the stock price. Where UEX, what you want to do, you as an investor have a choice. Where in this spectrum do you want to invest? So that's the question I really want to answer going forward. What I have about UEX is that we dominate this mid-stage to resource stage. This is your lower risk discovery, pre-discovery area where they're looking at smoke, following up old mineralized holes, following up the opportunity in growing resources that not many other opportunities in the uranium investment space exist. And so we look at our portfolio, that's how we span across. We have our Horseshoe, Raven, and Shea Creek deposits. They're ready to be pushed into development, but with the current uranium price, we know that we can't make them move, and we don't want to hurt shareholders by spending a ton of money at these low prices to push those projects forward. And when the market signals are ready, we will move those forward. The sweet spot for us is that mid-stage resource where we have things like West Bear, Christy Lake, and Hidden Bay, Black Lake, and Rio, where we're not even working, where there are not just one, but probably in the case of Hidden Bay, a dozen or more of these targets, where you're going, wow, anybody would love to have those in any one of those individual targets in their portfolio. Look at the opportunities we have to make that next discovery. And why is that important? Well, first of all, we'll look at Uranium Acquisitions since 2011. And on the left-hand side here is your purchase price in Canadian dollars per pound U3O8 that company or that opportunity had at the time the acquisition was made. And you can see when the prices were a little bit higher, there's some pretty substantial valuations on there. And even since things have been flat in 2014 and on, uranium price values are better than what UEX's current market cap per pound in our resource currently sits. So we'll focus in on the last 5-6 years here in the orange square. And you can see that since 2014, the acquisitions that have been made in the space, and some of these have more pounds and less pounds than UEX has, there's a lot of room for us in improving markets to see our portfolio of current resources that we have in the Athabasca grow. And you compare that to resource-bearing companies in the space, and you can say the same thing is true. So you go, great, we'll move. We have the opportunity to move based on our resource base upwards as we improve that resource and as the market conditions improve. And that's great. Probably even more exciting is when you compare the value of new discoveries to the what happens to production and development companies over the same period of time. So this is UEX back in the early days from 2003 to 2008. And on the top, on the right-hand side here, you're measuring basically a return on investment, how many times above its base price did it start back from 2003. And you can see that UEX, during the discoveries of Shea Creek and a little bit of work at Raven and Horseshoe, well outperformed development companies like Paladin over that same period, which had a great return, but the return on a new discovery is exceptional. And that's in a uranium price market that went up from $10.90 a pound to $135 and back to 53. So yeah, good times roll, everyone's excited, and yeah, that makes a lot of sense. But when you look at situations where the market is on the downswing, and this is Hathor from 2008 to 2012, they outperformed the development and mining companies as well, like Paladin. So stamp itself at almost 10-to-1 rate. And you can compare that to in down markets, what NextGen has been able to accomplish with their discovery at Arrow versus Cameco. So what I conclude from the data is that if someone makes a new discovery, it's going to badly outperform any company that's sitting on resources. So what is that? Why is that important? Yeah, and despite whatever the market might look like, why is that important? Well, from a UX point of view, we have that security of the pounds in the ground that are ready to move forward. It's that mid-stage to resource portfolio that we have that really allows us that sort of lower risk exploration. So if you're looking at a graph, you say, I want to make that next discovery, which company do I invest in? You can pick any company out there that has land, but wouldn't you want to be in that company that has the opportunity to have that lower risk exploration portfolio? And that's where UEX really shines. So that's what I think are sort of, if you're looking at UEX as an investment, that's what the value proposition is. It's that mid-stage portfolio that will outperform, if a discovery is made on them, any of the production development companies. So with that in mind, we'll just quickly run through some of our properties. Christy Lake, our project in the southeastern Athabasca Basin, it's the only junior land position basically between Cigar Lake and McArthur River. We're right along strike from on the same structure that hosts all the pounds of McArthur River. We have our initial resource there from the Paul Bay, Penn, and Aurora deposits, and we're continuing to work along the Yalloega trend to the north. Our first work in there in 2015-16 didn't have as much success as we were expecting, especially since we knew there was a uranium deposit discovery made just off the property boundary on Cameco's property side. We've come to learn that we think that the uranium chemistry and alteration structure is actually offset, and we're going to be testing this summer that offset trend with drilling. Right now we're out there doing some geophysics to help us refine our targeting in that blue-green area for the summer drill program. And we think that's got a great opportunity to find additional lenses of mineralization. We do know that uranium deposits form pearls along a string, and we're pretty surprised that the alteration on the north trend died off so quickly, but that fault offset explains things. We've also got opportunities to follow up mineralization we found last year just south of the deposits, and really strong sandstone alteration that is usually indicative, this kind of PPM sandstone is usually indicative of something in the sandstone. So we're really excited about what we can do at Christy Lake to grow resources there in the next couple of programs. Turning gears over to Hidden Bay on the eastern side of the Athabasca Basin. This property here, it's sort of explored historically for classic exploration for unconformity deposits. So there's a little inset there which says Eagle Point deposits. That little blue box is where all the work has been done so far on Hidden Bay. But the deposits like you see at Eagle Point, your Arrows, your Griffins, and that, they sit off down into the basin below the unconformity and alternate structures. And so we're using our database at Hidden Bay that looked in that little blue box to find additional deposits, because we know that there's smoke that'll lead us there. It's very shallow. It's infrastructure blessed. We border up on 2 mining and milling operations. We have identified 14 or so of these targets. And, the kind of things that we're looking at on our Hidden Bay property are very much like what we drilled at McLean South last November and December, where we have, like we do at Christy Lake, a string of deposits that form along a trend. At Sioux would have been mined out by Urano. And we've come to the conclusion that, well, we can't find along the Sioux trend. There are sniffs of mineralization on the telephone trend. We were out and tried to drill for these east-west targets in 2019. And if you put the Eagle Point deposits in at scale, they would overlie like this. We think between the 2 main trends are east-west faults, and when last year's program identified those, they're altered and they're mineralized. And now we have probably 5 to 8 of these types of targets that we need to follow up on over the next year or 2 or 3 as our resources permit. We think we can find the next set of these deposits that are forming on these east-west trends. And this is sitting idle in our portfolio this year, because this is the kind of targets we have at Hidden Bay that have yet to be followed up. A dozen or so targets kind of like this, which puts, which I think most juniors would love to have in their portfolio. At Shea Creek on the west side, the first of the west side discoveries, where we're partnered with world-class company Urano. We're 49.1% of the resources there. We have a 95-pound resources and 4 deposits along this 3-kilometer trend, as you can see here in the 3D model. The classic uranium at the unconformities in red and the classic basement mineralizations in blue. And what's interesting for us to note is that Canna and Ann host the bulk of the resource at Shea Creek. And it's mostly coming out of the blue areas down below. And you can see from the little shaded ovals, there's all sorts of areas where basement mineralization hasn't been looked at under the deposits at 58B, Colette, and N, where we believe there's a chance to substantially grow resources. And so we've been looking at over the last summer in the field and then doing some work with our 3D modeling. We're identifying dozens of these targets where we think not just adding 1 million pounds or 2 here or there, but where there's potential to add substantial resources to Shea Creek. So we're working with Orano, and we'll be looking at this spring, proposing to them a program that will help us grow resources substantially here at Shea Creek. And they're excited to hear what we have to say. At Horseshoe and Raven, on the east side of the basin, we're talking about just off the basin margin. We're right next door to the Rabbit Lake milling operation. We have an indicated resource there. While it's lower grade, if you plunk this deposit anywhere else in the world and didn't have to compare it directly to the McArthur River, Cigar Lakes, or Arrows, you go, wow, this is a really exciting project. We're ready to move this project forward when the market signals it's ready for more pounds. We've done some heap leach work on it here. We think it's heap. We've got some very great results in the laboratory. And the next step for us is doing a bench scale test on that kind of heap leaching study. It gives us a great opportunity to move a project forward extremely quickly because it's shallow, 50 to 450 meters below surface. You can use conventional mining techniques like you use in the Abitibi Greenstone Belt of northern Quebec and northern Ontario. And off the sandstone means no water challenges. So direct access grades, because of the grades are lower, you don't have the same radiation protection challenges and costs involved in more conventional classic unconformity deposits. We think that when the market signals are ready for more pounds, this project can move forward very, very quickly. And then our uranium and cobalt angle at West Bear. As you know, we've got one of the first ever primary cobalt deposit in Canada. We've been able to define it last year and grow it substantially along strike. We're still working on the 3D, or we've got the 3D model done, as you can see here. We're working on building the resource, and because we're a very small team, quite frankly, we've been drilling holes till the cows come home all last year. We're still working on putting the final touches on this resource. But we're currently out in the field, as you saw in our last press release, drilling holes on targets around West Bear, like Umberville, looking for the next set of cobalt or uranium deposits. What excites us now is that when we look at any target in the Athabasca Basin, we can see the potential for both cobalt or uranium. And so we're always keeping both of those in mind. And just for those of you, that's a critical cross-section, who will be in Toronto next week during the PDAC, we've been invited by the PDAC to show hole number WBC 12, which had 4.9% over cobalt and 2% nickel over 8 meters. It'll be at the Korshak booth 312. Or 3112, excuse me. Come and take a look at it. It is one of the highest grade cobalt intersections in the original world. So with that in mind, we're just under 400 million shares outstanding, market cap of around 46 million pounds. Cameco, one of our founding shareholders, still owns just under 13% of the company, and our founding CEO has just over 8.5%. While it's been a difficult market, we're in a very good spot to capitalize on our portfolio by making new discoveries on lower risk opportunities. Like I said, proven discovery team has found pounds all over the Athabasca Basin, an experienced board that's been there and done that low risk discovery potential based on our portfolio of mid-stage resource opportunities, but yet backstopped by the security of having pounds in the ground, and substantial pounds in the ground. And then the sweetener with that, with our knowledge of first-in-class cobalt nickel deposit discoveries that we could find more of across the Athabasca Basin. So with that in mind, we will be at the PDAC. So if you're in Toronto next week, come see us at booth 2419, or come see that core at another booth that we're going to have around the corner on the Monday and Tuesday, 3122 or 3112A. So with that in mind, that's what's happening at UEX with Uranium Markets over the next little bit. Please, I have a handful of questions that the people have submitted prior to the webinar, but if you do have questions, please come into or open up the Q&A tab. that you see on in the software that you're logged into, and put some questions down. I'll try my best to answer them. But with that, while I'm waiting for you to answer some of those questions, I will reach out here or look out here to my list of questions off the side here and answer some of the things that you've asked or shareholders have asked over the last couple of days since we announced the webinar. So first question up, with supply destruction that has taken place, where do you think the excess supply is coming from? Since the 2011 in the Japanese Fukushima event, there's definitely been more pounds going in, sold in the market on those contracts that have been coming out. A lot of that's been taken up by speculators. So a lot of the supply that's helped the market over the last couple of years has come out of stockpiles, but predominantly from the speculators or the investment groups. And so that's the supply that's becoming more difficult to pick up here over the last little while. And it's been hurting the market and making the utilities think that there's this long-term supply. How have you positioned UEX to be ready for the uranium market turnaround? So I think I've tried to answer that question over the last, over this presentation. While we would love to be moving our projects forward like Shea Creek and Horseshoe Raven into development, we just don't think it's fair to shareholders. The dilution and the costs are just severe. So we're positioning ourselves to work that mid-stage and resource portfolio to make the next discovery, grow the number of pounds we have in our portfolio so that when the market turns, the company is more valuable. Tell us about the recent logo change and what unearthing energy metals means to UEX. So as you can see in the last year, we did change the logo to reflect sort of the change in the way that we see the Athabasca Basin in our portfolio. We see clean air energy becoming more and more important. It's been one of the key global issues going forward, and we think we see that uranium is becoming more and more, or nuclear power, is becoming more and more a key integral part of getting clean air energy. But meanwhile, while we're looking for more uranium, we're also finding cobalt and nickel, which are part of that energy solution as well on the EV battery side. So we think when we're looking for exploration, while we're always looking for uranium on our uranium products and cobalt on our cobalt projects, the ability to find both is there. And so now we're really playing in sort of three energy metals: uranium, nickel, and cobalt. So to us, we want to look at all those opportunities when they come in front of us, because you never know which one pans out. Unfortunately, or fortunately, depending how you want to look at things, geology tells you which way you go. And if you were looking for, for many, many years, you used cobalt to find uranium. Maybe uranium helps us find cobalt in certain situations. So we want to be amenable to all that. Another question, what it would take for UEX to diversify out of the Athabasca Basin? So our strategy has been for several years and continues to be safe jurisdictions where there's political safety, investment safety, and the Athabasca, certainly being in Saskatchewan, as being the world's top 3 mining investment jurisdictions, fits the bill. So there's a lot of uranium out there you can find, and then oddly enough, in the good jurisdictions are also the safe jurisdictions. Good from a geological point of view and a mining point of view are also the ones that are good from an investment point of view and security point of view. There are a lot of pounds you can buy out there in places, in different jurisdictions, in different continents outside of Canada, Australia, in certain parts of Australia and the Western United States. But the most important part for us is having visibility to pounds that sit in the low cost half. As you can see from the long downturn that we've had in the market, the only places that can afford to keep running, Athabasca and Kazakhstan. And so if we're going to bring new production into play, you've got to be in the low cost half because the downturns here are severe. So it would take a project that we'd see in a safe jurisdiction that had significant enough resources to keep things running for a while, but had the ability to fit in the low cost half. So while we don't say no to being outside the Athabasca Basin, that's the kind of opportunities that would attract us to leave the basin. I have a question here. This post online. Can you share any more insights into Orano's upcoming assessment at Shea Creek? Are there opportunities to sell the product to the monetize on some capital, vice versa? I don't really want to speculate on what Orano's view is on things. Orano's not doing the assessment at Shea Creek. We are, and we're presenting them the results. And I think it's going to be, what we're finding is pretty compelling that they would have to do something. They don't have a lot of other deposit opportunities around the world to be able to move forward. to become to put themselves back in the top mining company sort of status. So we think that we show them this great opportunity to grow Shea Creek based on just the information we already have. They're going to be online. And yes, there's always an opportunity for either one to buy or sell. Right now, I think both parties are really excited about Shea Creek. So it's a much harder thing to do. Oh, I have some questions about synth readings and drilling, and on do we see visible mineralization holes. I cannot comment on that via disclosure rules. So I'm sorry that I wish I could tell you about those things, but I can't. So I apologize. They will come out when we have assay results to back things up. Any other questions on the? I don't see any other questions that are in the previous supply list. If you have a chance, please, I'll give you another minute here to try to put another question in the queue. Otherwise, I'd like to thank you very much for your time and your interest in UEX, and how hard your company is working for you to position yourselves for the inevitable change in uranium prices that will make your company more valuable. With no other questions, I will thank you for your time again and wish you the very best of luck. Thank you. Have a great day.